All right, welcome to Talk Tickers. Today, we are digging into Himax Technologies Q3 2025 earnings. And folks, this one's a head scratcher. The company dropped its numbers on November 6th, and, well, the market's reaction? It was swift, and it was not pretty. Just look at that. The stock got hammered, dropping almost 13% in one day. And this wasn't just some little pullback. No, this was a massive sell-off on huge volume, a really clear signal from Wall Street. So the big question is, why? What happened here? And that right there, that's the mystery we're going to solve today. Because here's the crazy part. Himax beat its own guidance. They beat on revenue, they beat on earnings. So what on earth did investors see that made them hit the sell button so hard? Let's get into it. So to really get what went down, you got to understand there were two totally different narratives playing out. You had the story management was telling, and then you had the story the stock price was screaming. Okay, check out this disconnect. Is wild. On one hand, you've got management's take. They're saying, hey, we brought in $199 million in revenue, which was way better than the big drop we predicted, and they even eked out a tiny profit when they told everyone to expect a loss. So from their perspective, a win. But then you look at what the market saw, a nearly 13% beatdown on the stock. Because profit, well, it basically evaporated, falling more than 90% compared to last year. Two completely different worlds. And that's the key, right? Investors weren't giving them a gold star for beating a low bar they set themselves. Nope. They were looking at the bigger picture, the real trend of the business. And let me tell you, that trend is not looking good.
Okay, this table tells you everything you need to know. First, look at revenue. Down over 10% year over year. That's not great. But the real gut punch is the profit line. It went from $13 million down to just $1 million. That is a 92% collapse. It's like the company's ability to make money just vanished. And the reason why? The operating margin, it's actually negative now.
And this is a really big deal. It means the company is now losing money just from its day-to-day business operations. So what happened? Their expenses shot up by 24% in just one quarter. Now, part of that was for things like bonuses and R&D, but it just goes to show you there is absolutely zero wiggle room in their finances right now.
For a chip company like this, especially when times are tough, nobody really cares about last quarter. It's all about what's coming next. It's all about the guidance. And this is where the wheels really came off the bus for Himax.
Boom. This was the final nail in the coffin. Management came out and said they expect to earn just 2 to 4 cents per share next quarter. The problem? Wall Street was looking for something like 8 cents. That's not just a miss, that's a massive disappointment. It basically told everyone that the financial pain isn't going away anytime soon, and that recovery everyone was hoping for, yeah, it just got delayed. So, with the short term looking pretty grim, what does management do? Well, they do the smart thing. They try to get you to look somewhere else. The whole conversation on their earnings calls shifted. It went from, how bad is it now, to, hey, look at all the cool stuff we're building for the future. And this is that future story they're selling. They're making 3 big bets. First, this cool WiseEye AI tech for things like smart PCs. Second, something called co-packaged optics. Think super fast tech for data centers that they hope is ready for prime time in 2026. And third, way out in 2027, the real futuristic stuff, AR and AI smart glasses. It all sounds great, right? But look at those dates. None of this is going to help them next quarter. So what's the bottom line here? You've got a really tough situation right now, clashing with a future that sounds amazing but is still years away. The market is basically saying, that's a nice story, but show us the money. So here's what we think happens next. We're calling this a market perform. Now, what does that mean? It means don't panic sell, but for heaven's sake, don't be a hero and try to catch a falling knife either. It's balanced. The bad news in the short term is probably going to keep the stock from flying high, but all that future tech they're working on should keep it from completely collapsing. Okay, so let's put it all together. Next quarter, the bar is so low, they'll probably clear it. But who cares? It's not going to be enough to get anyone excited. We think the stock is just going to be stuck, kind of stuck in the mud, trading sideways until there's some real good news. Now, the one thing to watch for, the wild card, is any update on that data center tech, the CPO stuff. If they announce a big customer or a breakthrough there, watch out. The stock could really move. But until that happens, it's a waiting game.
And as always, just a quick reminder, we're breaking down the numbers for you, but this isn't financial advice. Please make sure you do your own homework before making any investment decisions.